Today, home price falls accelerate, and will bank capital be impacted? Hello again, I'm Martin North from Digital Finance Analytics. Welcome to our latest post covering finance and property news with a distinctively Australian flavour. The ABS released the latest home price data series yesterday, and we consider this in the context of the bank's capital requirements. And by the way, if you value the content we produce, please do consider joining our Patreon program. Here is a link. Or make a donation via PayPal. Again, here is the link, so that you can support our ability to continue to make great content. The ABS released their Residential Property Price Index series yesterday. They said that the price index for residential properties for the weighted average of the 8 capital cities fell 1.5% in the September quarter, 2018. The index fell 1.9% through the year to the September quarter, 2018. The capital city residential property price indices fell in Melbourne, down 2.6%, Sydney, down 1.9%, Perth, down 0.6%, and Darwin, 0.9%, and rose in Brisbane, up 0.6%, Adelaide, 0.6%, Hobart, 1.3%, and Canberra, 0.5%. Annually, residential property prices fell in Sydney, down 4.4%, Darwin, down 4.4%, Melbourne, down 1.5%, Perth, down 0.6%, and rose in Hobart, up 13%, Canberra, up 3.7%, Adelaide, up 2%, and Brisbane, up 1%. And the total value of residential dwellings in Australia was $6.847 trillion at the end of the September quarter, falling $70 billion over the quarter. And they said that the mean price of residential dwellings fell $9,700 to $675,000, and the number of residential dwellings rose by 40,900 to 10.14 million in the September quarter 2018. Now, of course, these averages do not tell the true picture because the movements are not uniform across the states. In some postcodes, we are seeing falls now of up to 20% from the previous peak. Elsewhere, prices are holding more steadily. For example, in the Sutherland Shire, south of Sydney, prices peaked in August 2017 and have fallen by 10%, while the median home price is $1.1 million and the median unit price is $751,000. But then Hunters Hill peaked in July 2017 and has fallen 14.9%, with an average house price of $2.48 million and an average unit price of $1.07 million. Haberfield, in the Inner West, is down 10.3% from its peak in May 2017, with an average house price of $1.49 million and a unit price of $729,000. In contrast, in Newcastle, prices peaked in May 2018 and have now fallen 3.4%, with an average house price of $613,000 and a median unit price of $504,000. And compare that with, say, Wollongong, where prices have fallen 6.3% since their peak in November 2017, and the median house price is $687,000 and the unit price is $549,000. Now, look at Melbourne. Melbourne prices peaked in June 2017 and have fallen 4% on average, with a median house price of $1.17 million and units at $509,000. But postcode 3152 started to fall in February 2018 and has dropped 7.3%, with a median house price of $800,000 and a unit price of $545,000. But then Glen Waverley prices have fallen 5.6% since October 2017, with a median house price of $1.16 million and a median unit price of $701,000. Canterbury has fallen 11.6% since August 2017, with an average house price of $1.94 million and a unit price of $702,000. If you go to Brisbane, Brisbane prices peaked in April 2018 and have fallen just 0.3% since then, with an average house price worth $685,000 and units worth $409,000. But Toowoomba, in Queensland of course, property values there peaked in March 2015 and values have fallen then by 5.6%, with house prices on average $342,000 and units at $245,000. But in Douglas, prices peaked in 2008. Since then, they've fallen 21%, and the median home price is $392,000, and units are $247,000 on average. Now, if you look at Hobart, prices peaked in April 2018 and have fallen 0.7% since then, with a median price of $693,000 and a median unit price of $476,000. There again, Adelaide prices peaked in August 2018 and have fallen 2%, and the median home price is $792,000 and the median unit price $385,000. But looking across to Perth, there prices have dropped 22.7% from their peak in August 2013, and the median house price is $914,000 and the median unit price is $424,000. But if you compare that with Kalgoorlie Boulder, they peaked in March 2008, and since then they've fallen 32.6%, with a median house price of $260,000 and a median unit price of $147,000. And Darwin prices have fallen 25.3% since they peaked in April 2014, with a house price of $533,000 and a unit price of $327,000. So all of this shows that averages do not really make much sense. You need to go granular. However, given credit availability drives home prices and credit is harder to come by, we still expect more falls ahead. And then the question becomes, is a soft landing feasible? Now, I have to say that of all the credit cycles I've examined, none of them ever ended softly. So it would be a first if it did happen. But there is another point to consider. Major banks use internal risk models to calculate the amount of capital they hold against mortgage loans. Other banks use more standard approaches. The calculation is driven by a range of factors, but loan-to-value ratio, or LVR, is one element. And here is the APRA risk weights table. The point is, a loan with an LVR at 80% has a risk weight of 50%, but the same loan with a 90% LVR requires 75%, and 100% LVR requires 100% weighting. In other words, the capital doubles between 80 and 100% LVR. Now, at some point quite soon, banks will need to rebaseline their mortgage books. When property prices were rising, they would do this quite regularly to reduce the capital requirements that they needed to hold. And the reverse is also true. The governing APRA document says that the ADI must revalue any property offered as security for such loans when it becomes aware of a material change in the market value of property in an area or region. Now the question is, have banks started to revalue their portfolios, and have they upped their risk weights in the light of these falls? This is also, by the way, why economists who are attached to the major banks have an interest in playing down potential home price falls. APRA says the valuation may be based on the valuation at origination, or where relevant, on a subsequent formal revaluation by an independent accredited valuer. The determination of the appropriate risk weight is also dependent upon mortgage insurance provided by an acceptable lender's mortgage insurer, or LMI. Now, of course, many lenders also have access to automated valuation models from players such as CoreLogic. But now the question becomes, how much more capital will the banks have to put aside to take account of falling prices? And who will bear the cost of that? And will APRA back down on its capital requirements, which insist that banks hold more capital ahead? So I expect more weakness in bank share prices as the impact of this hits home. As home prices fall further, the impact will be magnified. As always, if you like what you've seen here today, please share and like the post and add a comment or question. I read them all. And if you want to join the growing band of subscribers who receive alerts when we release new posts, do subscribe now by hitting the subscribe bell. And if you have already subscribed, many thanks. I really appreciate your support and participation. I'm Martin North, the Principal Analyst of Digital Finance Analytics. Many thanks for watching, and I'll see you next time.